Parishit, thanks very much for that, and more on that story with Parishit, over the course of the evening as we get more details, but this seems to be pretty significant. We'll try and have the management of HAL also join us, at the earliest, and ask them about what, of course, has been signed and what all it involves. Now, Ajay Vora is joining us now. He's head of Equities at Nuvama Asset Management. Ajay, good to have you with us here. Thank you very much. HAL, of course, is what we were talking about, but it kind of also puts the focus on defense, right? In a big way. Stocks, of course, have rallied, but what do you make of it? Do you own anything in the portfolio? Do you like any of these names? If this is directionally, if this is where it's going to go, then there could be a lot more value creation. When I say directionally, I mean direction towards technology transfers, etc., across a range of industries. Here we're talking about aircraft, but there are all other kinds of sort of weapons which we import right now. But we're talking about making in India with transfer of technology. What do you make of it, Ajay?
So good afternoon, Prashant, and thanks for having me. So honestly, it's definitely a great deal for the economy, for the government, and for the entire ecosystem. And this is exactly in line with what we have been discussing, or what the government has been actually promising over last few years. And we all know this takes a little bit more time, and eventually this has materialized. But I think it's great for the market perspective also, because these kind of sectors offer very large opportunities, and that is now materializing. So in a way, if you look at sectors like defense or railways, these were non-existent a few years back, and we have amazing opportunities in these spaces now. So coming back to the how stocks have done, obviously a lot of positives are priced in to a large extent. So there can be some sort of time correction, but my sense is from here on, if someone is really having a long-term view on these sectors and these names, there can be a reasonably decent value creation happening over here.
Okay, so that's the call on defense. Ajay, hi, good afternoon. What else? This has been a red hot market, right? Specifically mid caps in the last 2.5 months. Where do you still see pockets of opportunity?
So, hi Surbi. So, if you recollect, in our last conversation, this is what we had discussed, that we were getting more and more constructive on the mid and small cap side, considering their underperformance. And also, if you look at it, the whole setup was pretty much ripe for mid and small cap to outperform. So, falling interest rates, falling inflation, and earnings growth was also likely to be pretty strong. Basis that, we have seen almost 20% rally in BSE mid and small cap indices. Versus say 12% for Nifty. So that clearly tells you what sort of rally we have had over the last 3 months. And this pocket, I think, is coming out of significant underperformance over the last 2-3 years. And in spite of this rally, there can be some sort of retracement. But we are looking at more constructive stories and themes over here, which can deliver significantly higher returns over the next 2 to 3 years. So needless to say that this 20-30% move in stocks doesn't take away the long-term, compounding trajectory from most of the stories that we are tracking.
All right. Hi, Ajay. Just hold on to that thought. We have a bit of a 3 p.m. move that it's playing out. The markets have again taken a leg down since we have expiry that's playing out. 18,770, that's the low of the day. We're just around 7 to 8 points away from those levels. And we have seen that when we visit that level, it's bounced a little bit. But crucial that we hold on to that, otherwise we could slide quite a bit in the last 30 minutes or so. Well, Ajay, just doing a quick market check on that front since we have expiry that will play out. But Ajay, everyone's talking about what to buy. In this sort of a market, I think it's quite prudent to think what to sell as well. Which story has already played out. Because now, the stories, once they start playing out, everyone's giving you a stock tip. We're not at reached that euphoria stage, but which is the sector that you would be a little bit cautious on?
So you're right, Nigel. So, we've had almost non-stop, I would say, a 12% rally, almost 2,000 point rally. And we have oscillated well, from 16.5, 17 times PE to now almost 20 times at the index level. So we are looking at more like, 940 rupees EPS in FY24. So we are almost there at 20 times. So I would say that, we are closer to the fair valuation right now. and therefore we need to reassess, the sectors which are looking pretty much expensive. So we feel that, somewhere if you look at the whole cap goods sector, it's running well ahead of its time, and it's more of a order book driven business. So execution will definitely take place, but there is a limit to which the execution can be executed. So broadly, we feel that the valuations are very expensive in that space, and one can look at profit booking, in few of the very expensive names.
Okay. So Ajay, if I remember correctly, in our last conversation, you were actually a little cautious on banks. This is a few weeks back. And actually, the Bank Nifty has been underperforming. I mean, we've not seen any kind of a blowout move whatsoever, even though FII flows have been still decent. So what is the sense from here on? What is troubling the banks? Is it the expectation of a margin decline? And how would you approach it?
So the whole, the thought was that if you look at it now with inflation falling, it can have some impact on the growth rates as well, right? So credit growth, which had gone to almost 17-18%, can drop down to say around 12-13% going forward, with inflation also coming down. And most importantly, the ownership was also pretty high across most of the names. And the supply overhang, you must have seen pretty large blocks happening in Axis and Kotak, and now certain names in the financial side, the NBFC space. So there was a reasonably higher supply which was expected to come in. And considering, the valuations were not as cheap when the Bank Nifty was at much lower levels. So all put together, we thought that, considering the over ownership, reasonable valuation and the supply overhang, we thought that there can be a pause to the overall, Bank Nifty rally. And we feel that, still, if there is a couple of, few percentage points of retracement from here on, then it gets into a really, interesting opportunity. We would wait for that kind of correction from here on.
All right, Ajay, before we let you go, if I remember correctly, I think you were talking about pharma the last time as well. I mean, a couple of times ago, late April, if I remember right. What's the view out there? And if you could share a couple of stocks, I'm not sure, but I think you briefly mentioned Glenmark. You could correct me on that front. But anyway, what's your view on pharma? And do you believe that the best is yet to come?
So I think you recollect pretty well, Nigel. We spoke about pharma and especially Glenmark. So, when we evaluated almost 3 months back, we saw a lot of value in that space. And fortunately, that space played out pretty well for us. Coming back to, Glenmark, as I said, that, large part of the valuation, I would say reverting back to the mean has taken place. Now it will be more like, how they deleverage on their balance sheet, and also improvement in their profitability because of reduction in R&D spend. We need to evaluate at that point of time. But the idea is that, when we spoke about it, the stock was trading at less than 4 times EV to EBITDA. And therefore, we found a lot of value over there. But if you generally look at the whole space, the undervaluation of the entire sector is now getting corrected. And therefore, most of the names are trading at fair valuations. And in fact, in this rally, that has been the case with few other sectors as well. So if you look at NBFC as well, most of the names were trading, way below book value. And last few couple of weeks rally, we have seen that also reverting back to mean. So, the best part about this rally was that, it has been pretty secular across most of the sectors. And now we are looking at more like fair valuation rather than, below mean valuations.
Okay, got that, Ajay. Thank you very much for joining in. Good having this perspective from you, and we look forward to our next conversation. We do have to take a quick break with the news that the markets are managing to just hold above that low.